Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, February 19, 2016. This week we'll look at stocks which may be already rolling over to the downside. The bonds are retesting their recent breakouts and recent all-time highs. The dollar is firming, I think. We'll look at gold in a pretty in-depth look, and we'll look at if it indeed has ended its bear market that started in 2012. I will also introduce a gold breadth index, or I call it GBI, which I created as an experimental indicator. Um, We'll also look at oil, which may have already failed at the 50-day moving average, and natural gas may be ready to retest multi-year lows again. Okay, so this is S&P 500 ETF SPY as a kind of like a proxy for the markets. Last week we had this spinning top type of candlestick, which is basically denotes indecision. I wouldn't necessarily call it a hammer candlestick because the open and close are kind of close to the middle of the candlestick. A hammer candlestick really should have had a longer kind of tail at the bottom, and the close should have been closer to the top. So I really don't think that this is a strong support here. So if we roll over here and continue down, I don't think this will hold, and I think we'll continue and make multi-year lows again. Excuse me. Now we're approaching this resistance area I marked here on the chart. So this is a 50-day moving average. Also, there is a gap down here that needs to be filled. Another gap is right here, a very large gap that has not been filled as of yet. And actually, last week I mentioned that there are many gaps that remain quite a ways down below. So if we assume that all the gaps will be filled, then there's quite a bit of gap filling that needs to happen. In any case, I think this resistance area is very strong, and I think here is it's a possibility that S&P 500 will fail in this area. Further down below, we have some momentum indicators and also advanced decline line. We did hit new lows for the move last week for the advanced decline lines, and the same thing goes for unbalanced volume. Okay, this is S&P 500 large cap index, the actual underlying index. Here you can see that this looks actually different than the one for S&P 500 ETF SPY. This looks kind of like a hammer candlestick, but it's a really weak looking candlestick. If the close was maybe around here, or preferably if it was above the open, I would have considered it a little bit stronger, but this is a very weak looking candlestick, and I really doubt it will hold if we retest it. Further down here, we have stocks above the 20-day exponential moving average, and you can see that already is in overbought territory. And in the downtrending security like S&P 500, overbought readings are basically like a indicator to look for shorting opportunities. Like for example, right here, we already had this overbought reading in beginning of end of January, beginning of February, and immediately we had a sell-off right after that. So there's just something to think about, that S&P 500 is already overbought. Now, of course, unless you bought down here, which is kind of like bottom picking, then possibly that's people are already taking profits here. Long term, the picture has not changed a bit. In fact, well, it changed a little bit because we now have percentage of stocks above the 50-day EMA, slightly better readings. So definitely, if it gets up above 60, in this area, that would be already quite overbought because this is a bearish security. Also, this bullish percent index was actually able to get above 40 for the first time, this year basically. So, anyways, S&P 500 is already getting somewhat overbought, so I would not be surprised if the shorts come in this area, especially this peak here is very important. Alternative scenario, of course, is we punch through this resistance above 1947 and continue higher to maybe 2000, where the 200-day EMA resides right now. Okay, this is NYA, New York Stock Exchange Composite Index, a very, very broad market index. This one broke down very strongly, conclusively here in the beginning of 2016, rebounded to the broken support, again broke down. Now again we're at this broken support, which now turns resistance basically. So this area here around 9600 is pretty important to this NYSE composite. Again here, if we get rejected here at the 50-day moving average, then I'm almost certain we're going to get new lows, because this does not look like a strong looking candlestick. Further down below we have some breadth indicators. So this is new highs less new lows divided by total active symbols, and you can see that there was not enough highs coming in. There was not enough. This index has not been above plus 10% for the past year, basically. This is going back 11 months. But it has been showing more and more of new lows being made. Advanced decline line again hitting new lows for the move. So anyways, and then as before I showed the percentage of stocks above the 20 EMA, you can see it's already in overbought territory, while the security is actually bearish. So this could be already an overbought condition. And same here for bullish percent index. We have not had a move above even the 50% since about here, actually, since last. I'm sorry, since about here, since last December. So it's a rather weak looking chart, and the market breadth is confirming this weakness. All right, next let's move on to the bond universe, which looks a lot better. Okay, this is TLT, the long treasuries fund. Very bullish chart, I think. There were several breakouts here above this high as well, and then finally above this high, and the continuation to all-time highs. So this is a very bullish chart. It's showing that people are interested in buying bonds, and basically this means that people are scared and they just want to have their money returned to them, not necessarily the return on the investment. But we did hit all-time high here, and I think this was kind of like an evening star pattern with this 3 candlesticks here. Then we continued lower, but I think this support for now has held. Of course, this candle here on Friday doesn't really inspire confidence, so we may get another retest next week, and if it holds, then probably we're gonna see a new all-time high soon. Further down below, you can see on balance volume is keeps pushing higher and higher. This just means that money is rotating into TLT and most likely away from stocks. Okay, this is a longer term chart of TLT. This is a weekly chart, so each of the sticks represent a 1 week's worth of activity going back 2 years. So I pointed out this chart before. Possibly we have this cup and handle pattern, and basically we're getting to the target, well, at the very least of this depth. This is a rather conservative target. You can also measure it from this depth here, and then it would put it even higher. But we did hit an all-time high at 135.25, this 134.80, so maybe this whole pattern is another big cup and handle, so or another big cup of some sort. So maybe this whole thing will be duplicated on the upside, and if that's the case, let me just do a quick measured move. So indeed, from the bottom of the pattern, let me do a quick measured move. So that's 18%, from 18% from a breakout. So this is 21 points, and we're at 135 plus 21, so about 155 maybe. That's a very significant move, and if it does happen, that would indicate that money is really scared, and most likely stocks would be in a serious trouble. Hasn't happened yet, of course, but this is something to consider, and I think that this is a very bullish pattern here. All right, let's switch gears a little bit and look at the US dollar index. I still think that this is a bullish chart. These are close to 52-week highs. They were just close to them. I didn't really exceed the 52-week highs, and then we kind of dropped, rose in a wedge-like pattern, and then dropped again. So we'll see if this support holds, but I think it is holding for now, and there's this gap up here, which is indicating a significant buying pressure here. Now, for now, this index has not been able to close above the 200-day moving average, this green line, and looks like it was rejected at the 50-day EMA for now. But maybe we get a throwback to this gap area, and then another leg higher. This is a bullish security, so I would not even be looking for selling opportunities. I would only be looking to go long. I don't really trade currencies, so. But in any case, if dollar does gain, then commodities again will come under selling pressure, and of course, gold is the commodity that everybody is interested in. So let's continue to gold next. Okay, this is gold spot price daily chart. Pretty strong move, I'm not going to deny it. This is a low here in December to the high here in February. This is a little bit over 20% move. This is quite a powerful move. Now, in the next few charts, I'm going to lay out my case that possibly we have not yet entered a bull market for the gold. This is indeed a powerful move, but in the context of a bigger bear market that has been in effect since 2012, we may not be there just yet as far as a new bull market beginning. So let's continue. Actually, this is interesting too. The volume has been lagging. This is on balance volume. You can see that so far we have not seen a breakout in volume for gold itself. We had a higher high here, but we have not had a higher high in on balance volume. So it's just something to consider also. Also, I'm not a perma bull or perma bear in gold, or for that matter in anything. I try to look at charts as objectively as possible. I have no problem buying gold once it becomes bullish, but I don't think it has become bullish just yet. Okay, this is a long-term chart as a weekly chart, but this is just a line chart of US dollar index and gold here in the yellow, and US dollar index in green. Now, one thing that's kind of comes pretty obvious is that these are somewhat strongly inversely correlated. So if dollar goes up, the gold usually goes down, and vice versa. If gold goes up, the dollar usually drops. And you can see here below, this is a correlation, 20-week correlation coefficient, and it usually spends its time in a negative territory. So the point of this exercise is that I wonder if the recent move up in gold here was caused mainly by the drop in the value of US dollar. But you can see that I think the dollar is really in an uptrend. So, once dollar resumes its uptrend, I think gold will come under further selling pressure. And here below we have CPI, the Consumer Price Index. And one of the other reasons why people buy gold is because they think that the prices will, there will be inflation, and the gold will be a hedge against the inflation. Now I'm going to zoom in here in the past couple of years, and I'm going to see, and it looks like the inflation is really rather tame. So let me go down here. I'm going to change this to price performance, and I'm going to zoom in into the last 2 years just to illustrate the point. And you can see that the CPI, price performance, for the last year or so has been hovering around 1% or so. In fact, last year it briefly dipped into a negative territory. So as far as the inflation is concerned, I think it's pretty much very tame. So buying gold as a hedge against inflation, I wonder about that. So I think the majority of the price fluctuations of late has been due to the fluctuation in the dollar index itself. All right, this is again gold weekly chart. So each one of those sticks represent 1 week worth of activity, going back to 2011. So the bear market on gold started somewhere around here, I think, in 2012. I'll show in the next chart why I think that is so, and why I don't think this is the beginning of a bear market. Now, since the beginning of the bear market, we had several very powerful moves, which ultimately ended up being counter trend moves. So you can see that it was a move up here, it was pretty powerful, and then an even more powerful move down. Again here, and I put, everywhere I put breakout, breakout, question mark, question mark, question mark. In fact, the latest one, I did the same thing. This is also a breakout with a question mark, because I don't think the indicators that I'm following have turned bullish for gold just yet. And you might say that but this is a very powerful move. This is about 21%, and I'm going to say that this move right here is also 21%, and ultimately it resulted in another breakdown and another multi-year lows. So we'll see if this is indeed a true breakout. First, it must hold on a retest. For now, I did not see a retest just yet. I only saw prices run up from the bottom here in December, as I showed, to the top here in February. I have not seen a true retest of a breakout. A true retest of a breakout would be a pullback to around here to 1100 or 1100, what is it, 80, 90 or so. If it doesn't hold, then there'll be even more question marks about gold and its breakout. All right, finally we get to the indicator that I have created, and this is called, I call it the gold breadth index, which is a GBI. It's an experimental indicator, and this above here is basically a digital signal. It's either yes bullish or no bearish. So there are no ambiguities. Now, this indicator itself is designed is a derivative of these two and some of the other indicators that I follow. So you can see it's quite noisy data. So I'm not even gonna go into that. But combination of several indicators that I follow basically rolled into one, and I created this GBI. Now, one way to look at trends and see if the security is bullish or bearish to simply look at the 50-day moving average and the 200-day moving average. If the 50-day is above the 200, then the security is bullish, and vice versa. This method, of course, doesn't produce, or rather produces quite a bit of whipsaws. In other words, false trend changes. Like, for example, right here, you can see that there was a breakout. A 50-day moving average went above the 200, and then it went right below. And then another one went above and then went right below. So it does produce false trend signals, because you can see that the bear market clearly did not end and still continues possibly. So what I did is I counted all the 50-day over 200-day moving average crossovers and then crossovers back. And from 1985, 84 rather, there were about 32 trend changes. And clearly not all of them were true. There were a lot of false signals. What this indicator is showing me is that I was able to eliminate quite a bit of the noise by using quite a bit of back-tested, back information about the gold miners and the trends within the gold miners, within the basket of gold miners. And this indicator actually gives pretty good results. So so far I was able to narrow, to get 75% success rate for back testing, of course. Going forward, it's another different story because we'll see if this indicator has a good predictive value. But looking back at the data, I was able to get to 75% reliability. So, as of right now, again, I'm going to zoom in a little bit, and I see, rather right here, you can see that there is no, not even a 50-day is above the 200-day moving average. So not even a very basic indicator of trend has yet flipped into a bullish camp. So there's really very few indications besides the fact that we had a pretty powerful rally off the multi-year lows that gold is indeed in a new bull market. And again, this has happened before many times in the past. And this is data going back to 1985, and I have decent data, quite reliable data going back to the 1985. So again, nothing against gold personally, but I need to see more evidence to switch into a bullish camp. And to wrap up the gold segment, this is GDX, Market Vectors Gold Miners ETF. Again, a very powerful move of the lows. This is about a little bit over 50% move. So, really quite powerful. And, GDX is really a volatile security, so you have to be even more careful when trading it. Also, there is quite a bit of gaps here that are still unfilled. So for example, this gap, which is a gap above the 200-day moving average, is unfilled. Another gap is right there. So if we do turn around and start filling these gaps, we could potentially completely fall apart and make a new low. Again, nothing personal against GDX, but I do need to see more evidence. Good, nice breakouts here, potential breakouts here in the advanced decline percent, advanced decline volume percent, and on balance volume. The bullish percent index also is in a 58% territory, but I think it really needs to go higher than that to confirm the bullish stance. Here's one really positive thing, and this is, finally we're seeing new highs appear within the index. So, overall, very powerful breakout, but maybe it's not a breakout. We'll see really if it is or not. All right, continue on to the other commodities I follow is light crude oil spot price daily. We hit the multi-year lows here just last week, and then there was a pretty strong move. Again, this is a counter trend rally in my opinion. And so far, we haven't even been able to close above the 50-day moving average. This was the last time it was above the 50-day moving average here. So, maybe they will cut production. Maybe somehow the demand will increase. I'm not sure exactly how the demand will increase for oil, but maybe they'll cut production and finally get some kind of a, general action by the OPEC, and I'm not exactly sure what that will happen, but what that will cause, but maybe it will tighten the supply. But in any case, there is now resistance here at 34. You can see there's quite a bit of resistance here. Should it break out, there's going to be resistance around here at 38. Should it break out above there, there's tons of resistance here in the 45 and the $50 area. That's if it even gets that high. So far the really action is not very encouraging. All right, then let's finish off with a natural gas. Multi-year lows here in December, a rebound to the pretty much to the resistance here, rejection at resistance, continuation lower, and this is a rising wedge, and I pointed this one out. Then we had the rising wedge break, another move lower, another counter trend move, and this was also, I pointed this one out, this looks like a rejection at the 50-day moving average with a shooting star type of candlestick, and then it just fell out of bed basically. Natural gas again approaching multi-year lows. Nothing really bullish about this chart except for the fact maybe it's a little oversold. But oversold in a downtrending security doesn't mean much. I wanted to point out this bullish divergence here. That didn't really work out, and this is a problem with the bullish divergences in a bearish security, is that they don't normally work out. Anyways, on balance volume, I use mostly like a confirmation of my bias, and that's why I didn't really pay attention much to it. But it's something to keep in mind. Sometimes it's good to have a confirmation, or if you're worried that there is a divergence versus the way you're trading, then that's something to keep in mind also. Anyways, that's it for this week's recap. Thanks for watching. Please stay tuned on how to find us on the internet. Thanks a lot. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services that are now active. Please consider subscribing. You get 3 weeks free trial, and it's only $24.95 per month thereafter. You get access to my charts, exactly what I'm buying, exactly what I'm selling. I have an internal blog. Also, I have several videos that have to do with trading and various aspects of risk control, as well as just the psychology of trading. So please do consider signing up. The subscribers are getting really good results, I think, and I'm getting some very good feedback. I have a performance section here where I post the actual portfolio percentage change. The inception date was in 2015 October, so it's not a lot of history yet. And there's some backtesting results that I feature here as well. The blog, of course, is where you'll get this information, and there's a video section where I separate them out for easier access. Click on the social page, and here we have a link to public charts page where most of the charts that you're seeing in this video are going to appear. If you have Twitter, Facebook, YouTube, StockTwits accounts, you can find us there as well. If you subscribe to our mailing list, you'll get a special price for our trade alert services. That's it for watching. Thanks for watching, and have another great trading week. Bye-bye.